Hi, welcome to my channel, Second PUC Accountancy. Learn, understand, and excel. Today, let us start with our first chapter, Accounting for Partnership Basic Concepts. Let's see the marks allotment for this topic. Section A, 1 mark, 2 questions. Section B, 2 marks, 1 question. And Section C, 6 marks, 1 question. So totally for this chapter, 10 marks are being allotted. So now let us begin with our chapter. First, we'll see what is the definition of a partnership firm. The definition of a partnership firm is given according to the Partnership Act 1932. According to the Act, it defines that a partnership is a relation between persons who have agreed to share the profits of the business carried on by all or any one of them acting for all. So what do we understand by this definition? A partnership firm is a relation between persons. So there should be at least 2 or more people to start a partnership firm. And there should be an agreement between the partners who come together into a partnership firm. And the agreement should be to share the profits and losses of the business concern which is being carried out by the partners. And this business should be a legal business carried out by the partners, and this can be carried out by all the partners, or if any partner is not available, the other partners who are present in the firm can act on behalf of all other partners. So this is the definition given according to the Partnership Act 1932. Now let's see what is the meaning of partnership firm. This can be asked as 1 mark question. What do you mean by a partnership firm? So we know that 2 or more people should come together to form a partnership business. So therefore, the persons who enter into a partnership with one another are collectively called as partnership firm. Therefore, 2 or 3 partners come together, agree upon to run a business concern collectively. Together, put together, they are called as partnership firm. Now let's see who is this partner. We kept on saying partner. Now who is this partner? A partner is an individual person who enters the firm to make an agreement with other partners is called as a partner. So therefore, a person who enters into the partnership firm with one another individually, the individual person, we said 3 people, 2 or more people can come into a partnership firm. So therefore, the individual person is called as a partner. Now we'll move on to the next main topic, the general features of a partnership firm. So here, any 2 features can be asked as a 2 mark question. Okay, so here the features of a partnership firm, let's see. The first one, 2 or more persons. So according to the definition given, 2 or more people should be there to start a partnership business. So there are 2 partners available. There should be 2 partners available to start a partnership firm. Minimum 2 people are required to start a partnership business, and maximum it may go up to 50 members. This is given as per the Rule of Companies Incorporation 2014. The second feature is the agreement. We know that in the definition it is said 2 or more people should come together to make an agreement to carry out a business operation. So a partnership firm can come into existence only through an agreement. There should be an agreement between the partners. Okay, this agreement can be a written agreement or it can be an oral agreement between them. The third feature is a business. As we have already seen in the definition, the partners should come together to run a business operation. And this business operation should be a legal business operation. It can be any kind of a business operation. It can be a small business or a large business concern, or it can be to carry out a trading business or a manufacturing business. Okay, so or it can be a banking business or a non-banking business. Any kind of a business operation can be carried out, but there should be a business operation carried out by these partners, which should be legal in the eyes of the law. The next feature is about the sharing of profits. How do the partners share the profits in the firm? They share the profits in the firm according to the agreement. Okay, they have to agree upon to certain ratio to share the profits and losses between the partners. Each partner can share maybe 40, if suppose there are two partners, 40 is to 60 or 50 is to 50. Okay, so they have to agree upon to share the profits and losses between the partners. If there is no agreement, if they have not agreed upon to any ratio, then all partners will share the profits and losses equally between them. The next feature talks about the mutual agency between the partners. So in the business concern, in the partnership concern, the business is carried out by all the partners or any one of them acting for all. So therefore, every partner is entitled to participate in the conduct of the affairs of a business operation, of the partnership business. They have all the rights to carry out the business operation. Every partner has equal right to carry out the business operation. But in case if any partner is not available in the firm and due to any circumstances, then the partner who is present in the business should carry out the business operation on behalf of other partners. So therefore, we can say the relationship between the partners in a partnership business is a principal and agent business. So every partner is a principal. He is the owner. So every partner is the owner of a business firm. And in the absence of other partners, they should also act as an agent on behalf of the other partner and run the business operation for the benefit of all other partners who is present and who is also not present. And they cannot make any secret profits in the absence of the other partner. So whatever action they take in the business activities, it is bound by the acts of the other partners. So therefore, they have to carry out the business operation for the benefit of all the partners in the firm. Next feature is the liability of the partners. What is the liability of the partners in a partnership firm? The liability of the partners in a partnership firm, they are jointly liable for the losses that are arising in the firm, and also severally it is liable. Every individual is liable for the loss of the firm, and they are also jointly with all the partners, they are liable to pay the loss or the debts of the partnership firm to the third party. And therefore, here their liability is unlimited. It is not limited only to the partnership business, but it is unlimited, which means that even the private assets can also be affected to pay off the liabilities or debts of the firm. The private assets of each and every partner can also be affected to pay off the debts of a partnership firm. These are the features of a partnership concern.